Okay, I'm glad you brought that up because I don't think I have that in the packet. What are some red flags to never buy a property? Does anybody have any? Go ahead, Billy.
Mold.
Okay. If you see a lot of mold, that's a good one. So like water, that's kind of an advanced kind of deal, but especially mold. Anybody else?
Foundation settling.
Foundation settling. Again, let's flip these on the other side of the coin too. These could be opportunities. If you know something that the other people don't, you may get that property at a discount. So anytime you see like foundation problems or mold, just assume a discount. That's going to lower your offer. All other things being equal. Here's a couple more because I know everybody's tired. Train tracks. You're near the tracks. But that doesn't seem to bother anybody in Nashville right now. But historically, if it's by the tracks, it needs to be at a discount. High tension power lines. That's something sometimes people just will not buy. So when you're looking at ratios, you've got to always be thinking about exit strategy. Like when you're analyzing property, whenever I have it in the packet, that you got to think about what is my exit strategy if I get in a pinch. Like the gentleman mentioned about incorporating or something like that. I'm always thinking about, what if I decide I don't want this property anymore? I want to make money on it when I sell it. I want that to be an exit strategy. I want it to cash flow as a rental first, but I want to sell it and make money if I need to sell it. Let's say for some reason I have just a terrible emergency. I get hurt, or my wife or something, and I need a lot of cash. Maybe I can't work or something like that. I want my rental property to be something that I can sell and make money on if I need it to. That's just another exit strategy. Does that make sense? So mold would be something where that's going to be expensive to cure. So in your packet I wrote, is it an owner-occupant area? Is it a rental area? Is the street just full of multifamilies? Do you see a lot of people doing like loitering activities where they look like they may not be up to no good? Or the area has a lot to do with it. But as we all know, there's parts of Nashville now where you just can't believe that a $500,000 house is for sale right there. But again, I'm a Tennessean, if you couldn't tell already. So to one person to the other, totally different. That's what is cool about real estate. You just need one buyer. It just takes one person to sell that property. So I think it's crimemapping.com. That's a powerful website, guys. I looked at my house the other day, and there's a lot of college mischief in Murfreesboro. But like the mayor was saying, to get off track for a minute, I'm sure Nashville has some too. There's just a couple apartment buildings, not apartment buildings so much as short-term stay hotels in Murfreesboro along the interstate. That's where most of the crime comes from. So if you can identify these sources, maybe that might be where you could go in and buy a piece of property and then clean up the whole neighborhood. People at rent have bought the crack houses, and if you get rid of the crack house, everybody else on the street is thankful, and you tear that property down or fix it up or whatever. So I would never say no to something as long as the numbers make sense. So anytime there's something that's a bad thing about a property, that's just where you've got to mentally take it's at a discount. So if I sell it, I'm going to have to sell it at a discount too. So we mentioned train tracks, high tension power lines, mold. Let's go ahead and throw water stuff in there too. One I see a lot, some people find is a negative, I personally do, is like a house below street level. So some of these streets in Nashville, they're hilly. One side of the street, the house is up kind of above street level. The other house is like below street level. Some people think that's not desirable. Steep driveway when we get ice and snow, especially for pretty houses, owner occupants, things like that. Rentals not so much, but a steep driveway like in Antioch or Brentwood, see that all the time. I'm glad you brought that up. Thank you for bringing that up. We live in a flooding town. There's a lot in Nashville. Did anybody hear about Bordeaux flooding a couple weeks ago? See that in the news? They got a ton of rain. We got very little at my house in Murfreesboro. Bordeaux flooded. Me personally, that's not a part of town I'd want investment property for that very reason. So if it's in a floodplain, you should probably purchase flood insurance. And flood insurance, that's going to cut down on your cash flow. Now, I know investors that rent that they say, I don't even take it into consideration. It's not a problem. It's not a big deal.
Is that not required?
So if you own a property with no mortgage, you don't have to have flood insurance. You don't have to have home insurance. But if you have a mortgage, you will buy flood insurance. You will buy home insurance. And just to get to a big picture real quick, as an investment, we need to have hedges on our risk. So insurance is a hedge. It limits our downside. Anytime any of the stuff that we do with real estate, we're always trying to limit our risk. The gentleman mentioned incorporating into like a legal entity. That kind of insulates you from some risk, where somebody can't totally take away your asset if they come after you. So like with a flood, you could have a complete loss. If you don't have home insurance, if you don't have flood insurance, that might be a total loss, because then you're going to have mold and nobody's going to live in that property. So take into consideration this stuff where insurance is a good thing. I love insurance.
Where would you go to look up to see if the house?
A lot of people that are not investors, they buy just based on emotion. You guys are buying and selling on logic. You're trying to take the emotion out of this equation. And that's really hard when you first get started. I mean, my first rental, I made it so nice, I over-niced it. One thing I wanted to mention that I didn't mention earlier about flood insurance, the federal government can raise that flood insurance arbitrarily. You have no control over how much flood insurance, it's going to keep going up. It's inevitable. So if you have a property and you want to buy flood insurance, more than likely that's going to cut into your cash flow as time goes on. How much, I can't say. One thing you can look at though, on kind of the bright side, we just had a 500-year flood in 2010. It's very unlikely Nashville will flood as bad as it did for the rest of our lives. But it could happen. I mean, Baton Rouge just had a 1,000-year flood. Okay, we've talked about real estate team, and the last one, mentor. I'm assuming everybody here has been to a couple of the REN meetings, has met some of the people. They've helped guide me into kind of what I wanted to do. Can't stress enough how valuable REN is for helping you figure out what you want to do and going forward. Analyzing property. This is one of my favorite ones. So I've got a couple quick ratios on the board here. Rent times 75. If a house rents for $1,000, you can pay at most $75,000. Does that make sense? That's a quick and easy one.
Sorry, say that again.
So if you know that a property will rent for $1,000, you multiply the rent times 75 or 70, if you want to go even more conservative, or 60, whatever number you want to rent it for. Rent times 75, that's the most you can pay for it. So if it was $1,000 in rent monthly, the most you can pay is $75,000. If you'll buy real estate based on that rule, you're going to make a lot of money. Those deals are hard to find right now, guys. You're going to be looking in parts of Nashville or the surrounding area where they're just tough to find. I mean, I'll be the first to admit it.
Or the less desirable.
Yeah, the less desirable. There's this kind of like scale where the properties that are kind of low end, those are going to cash flow more. Does anybody know what the most lucrative, most highest cash flowing residential rental real estate is? What I'm going for is mobile homes. So mobile homes will get you the highest return on your capital, but you're going to have the most headache. And then you can go look at the other side of the scale where you might have a nice home. Maybe it's the home you live in now. You move out and you rent that one, and it's a higher end rental, higher end rent. Those people probably have more income, more stability with their income. There's going to be less issues. So you kind of got to juggle that back to what do you want. That's typically if you're just using cash. This is a quick ratio. If you want to take this even further, is say subtract any repairs that you need to do on the property. So it rents for $1,000, $75,000 minus how much is it going to cost to fix it up to be rent ready? Get a contractor over there.
Should that? Yeah, sorry.
In my experience right now, the way the market is right now, there isn't time to get contractors over to properties. Unless it's been sitting on the market a while, most contractors are busy. Now, if you have a relationship with one, you've done a lot of deals with somebody, you know them well, they'll meet you over there at something. But I would bring the contractor over here once you're in the due diligence period. You're under contract, and that's when to bring in the contractor. Make sure your numbers are right, and go from there. The gentleman asked on my first rental, when I walked around it, I was like $5,000. That's how much it's going to take. And I did almost all the work myself and ended up being $13,500. So whatever you think it's going to be, just go ahead and double it. And I heard that on a podcast recently, and it's true. Just double it, and you're going to be close. 2% rule. 2% of the purchase price in rent per month. Again, you're not going to find these in Nashville right now. Now, 1% is what I hear a lot of people tell me. I meet a realtor, they say, I introduce myself, I kind of specialize in investors. They're like, oh, I've got this great condo. Let me tell you about this condo. I don't know if you guys are on the REN page on Facebook, but realtors are doing it every day where they're putting in deals. So anyway, you could do 1%. How much return do you want to make? So a 1% rule is going to be like a 10% return. In my opinion, a 10% return is not enough in real estate. There's way too much risk. You might as well just put your money in the stock market to get a 10% return and do nothing. You need to make 15 to 20% at least, if you can. These deals are hard to find right now, guys. I think you just pick to me, this one's a lot easier to calculate when I'm just looking at stuff. Some people use this one, some use that one. Different people use different rules. I mean, I think we can all agree, if you've been looking for a while, there's a lot of out-of-town money. They're doing stuff that doesn't make any sense. They're paying way too much for stuff, but that's not you guys. Y'all are here at REN. Y'all are going to be in this game a long time. I don't know if everybody can see this. I'm glad you brought that up, ma'am. So a condominium versus single family. So my personal take on it is condominiums offer less control than single family homes do. Why is that? What do condominiums have that single family homes don't have?
HOA.
Good. So again, that's kind of risk that you can't control. So if, for instance, like some of these condos in downtown Nashville, they're $400 a month, HOA, $700 a month. It's just crazy. Whereas a single family home, you don't have to fix anything if you don't want to. So you have more control. So with a condominium, historically in Nashville, they've had lower appreciation. Now the downtown stuff is different because it's appreciating rapidly for now. But I like single family. I like the control of it. And again, on exit strategy, I feel like you can sell a single family home. It's just a better play. You can sell a condo, but I like the single family. I feel like that's something you can sell a little bit easier. So that's going to be in your due diligence period that you need to make sure that you can rent it before you buy it. On the MLS sheet, multiple listing service sheet, I've attached two of them to the back of your handout. For the condominiums, they say on there, the listing agent is supposed to put if renting is permitted. I don't know if anybody here is doing Airbnb, but that's something to think about with all this stuff too. Because when I got started, I don't even know if Airbnb existed. But a lot of people are doing it now. So a special assessment just for a home condominium I sold in Sobro this year, they averaged $500 a month. So it was $6,000 a year they were paying for special assessments every year. It just kept recurring. So they had to get out of that condo. I mean, they loved living in that condo. They could walk to Pinewood Social, walk downtown, but it was killing them. And they couldn't do Airbnb, and they could do long-term rental, but it didn't make sense. The rent that they could have gotten on that 3-bedroom was let's say $2,000. But with the assessments and the mortgage, you were looking at like $1,600, $1,700. So they were cash flowing a little bit, but again, you don't know where that assessment's going to take you, and all of a sudden you're at negative cash flow. That's not where anybody wants to be. Gentleman's asking, how do I know more about Airbnb? Philip at the Deals meeting a couple months ago, he had some guys talk here about it. If you'll follow up with me, I can pull up my email and I can tell you it was a broker at one of the real estate firms here in Nashville that was their thing. It's a pretty sweet deal, in my opinion. Though I think Nashville, it's got a shelf life. I think Airbnb, it's going to be here for a time, and then once we build all these downtown hotels, the lobbyists are going to say we don't want Airbnb anymore, and they're going to. A gentleman who's he does multifamily. He's a broker at Ren. He told me Nashville has a 10,000 room per night deficit right now. So until that deficit is squashed, they have no reason to kill Airbnb, except for these neighborhoods that don't really want it. So again, it's just kind of like how much risk do you want to take on? I think the people doing it, they're making obscene amounts of money. I mean, I'm jealous, but I haven't been able to find something that makes sense. All right. So we've talked about analyzing property. I've got here the number one rule. Does anybody know the number one rule in real estate? Don't pay too much. That's when, if you will buy right, you will always make money. You make your money when you buy. You make your money on the front end. I can't stress enough market research. Whether I have a love-hate relationship with Zillow as a realtor, but it's so powerful and easy to use how you can look and see what people paid for stuff. But in my opinion, the Zestimate is just an algorithm. It's just a math formula. It has no bearing on value. Let's take that real quick and let's go to, so anybody know what an appraisal is? So for those who don't, an appraisal, the bank requires that. They just want to make sure that you're buying something that equals or exceeds the value of what you've got under contract. Make sense? Most appraisers use the comparative sale approach for residential single family. You get into multifamily and commercial, you're looking at the income approach. But with residential single family houses, they're going to look at comparable sales, comps, half mile to a mile away, the last 3 to 6 months. Which properties they pick is anybody's guess. A lot of Ren people will meet the appraiser at the property, not when they're buying so much as when they're selling it, and show them the comparables they use to ascertain the value. The appraiser may or may not use those. But when I buy property, I look at kind of like what the appraiser would look at. What did the house sell for? What are the comparable houses in the last 6 months have they sold for? Am I paying retail? Am I, getting in? Is it too late? Is it early? That kind of thing, and go from there. Does that make sense? Okay, so right off the bat, I'll exclude new construction. Unless you're getting a new construction, just exclude anything built in 2016 or 2015. Then, if you can, find it in the same neighborhood. If it's that same old neighborhood, like if you're using CRS, see if you can find comparables in that neighborhood. And then just go out further away from it. So you want to match the bedrooms and baths and the square footage as best you can, but it's not a science. Appraisals are an art form. And we all have appraisal friends. It's their opinion of value. It's that big unknown in real estate that scares a lot of people to death, that a low appraisal coming back. And right now there's not a lot of low appraisals in Nashville, but they happen. I've had a few this year.